Hello, how's it going, everyone? Today I'm gonna talk about NEO. NEO just had his earnings this Thursday. I'm gonna go over his financial earnings today, and also there's a couple of news that I want to go over with you guys today. And if this is your first time on my channel, please give me a like and subscribe, and make sure to turn on your notifications for the next video. All right, let's look at the NEO's technical analysis right here real quick. And NEO dropped all the way to $13 like a week ago, right? And bounced back up right after the news that released from China saying that it support all the overseas tech company that is trading overseas, right? So bounced back up over $20. And then on Friday, it pulled back almost 10% after the earning. And this 9% I consider is a healthy pullback from like $13 all the way to $20, right? So from $13 all the way to $21, that is almost 70% upside, right? And then with a 9% pullback, and I consider that is a healthy pullback from here, because based on the financial, we're gonna look into the financial, see how great the financial is. So on Friday, the overall small caps and tech companies all pull back at the same time too. So, but looking at the chart, we set the bottom around like $13. So right now it's holding at like almost on the $20 level. We're still sitting at a great support at the $20 level, right? It's sitting at $19.91 at close on Friday. And let's look at a couple of news before we look into the financial, okay? Citi analyst is giving a target price of $87 on NEO, and it's still keeping a buy rating after the earnings we saw. There's a couple analysts still keeping their buy ratings, but Citigroup definitely right now is having a really high target price for NEO at $87, which is from this $19.91, about another 350% upside from here. So this is a great news, and all the analysts are pretty positive. So another news over here that China's financial regulators are planning with a new approach to break that down with the U.S. over the auditing, over the auditing work. So right now the Chinese financial regulators actually taking a step forward to end this long-standing conflicts with the accounting wars going on with the U.S. Over corporate auditing and making the Chinese stock that is trading over in the U.S. Stock exchange, right? So this is gonna be taken care of pretty soon. So the regulators are step in and try to get this clear up. So this is a great news. So the next breaking news, actually, Cathie Wood is buying NEO for the first time. So our funds actually bought 420,000 shares of NEO on Friday. So it works $8.4 million, 0.5% of its ETF total positions. So as everyone knows that Cathie Wood is heavily invested into like Tesla, and Tesla is one of the major holding for Cathie Wood's funds EV industry, right? But now actually Cathie Wood has realized that NEO had a lot of potentials in this EV industry, so it's actually added into the fund for the first time. So that also gives us a great sign, that NEO is actually have its market in China and has great demands, and Cathie Wood actually like look into it and actually put in the positions into it. Another news about NEO is NEO is trying to expand more countries this year. So it's going to international, not just NEO not just have a huge demand in China, right? So right now it's actually NEO is actually growing into international now. So that's a huge market, that's huge demand is, and also the most recent ET7 model that that is just released in March. And there's so many demands that people had to wait for 6 months for to get its product for the ET7 model in China. So let's go ahead and dive into the numbers real quick. So the total quarter revenue is reaching to $1.5 billion, and the total quarterly delivery is 25,000 vehicles, and the full year of revenue is $5.6 billion. And the full year of delivery of vehicles of 91,000 vehicles. The vehicle sales actually increased by 49% from the fourth quarter of 2021 to the fourth quarter of 2020, and increased 6.7% compared to the third quarter of 2021. So the vehicle sales, which is the demand, is increasing dramatically over year to year, 50% that you're talking about. So the vehicle margins also increased by increasing as well. Fourth quarter of 2021 is 21%. From last quarter was 18%. So for the total revenue, it's also increased 50% based on the vehicle sales. The gross profits also increased by 48% from the current quarter to the quarter of 2020. Of operations also increased by, by 162% from this quarter to the quarter of 2020. And that's possibly is going to due to a lot of developments and a lot of, growth, expense that they're going to research and developments on the new products and the new area that they invest their money into, right? That could be another reason that drive the stock down to 9% after the earnings. The net loss is also increased 57% from the fourth quarter from this year to last year. And the cash position that it has right now is $8.7 billion as December 2021. So they still have a lot of cash on hand for it to, because right now NIO is not profitable as every other, as all the other EV companies out there that is not profitable. It's still in the development stage. So you would not expect NIO to be profitable within a year or so, because a company like this is still need a lot of money to grow, right? So you're expecting like the net loss is going to be continually, either keep the same or or continually to increase. On top of that, that you want to see is liquidity, right? So it's its liquidity, its cash right now is holding at $8.7 billion. So it still need a lot of cash burn to keep this company keep going and keep growing keep expanding into like international, right? Market share in China, right? So the cash position is still pretty strong right now. I hope this video is helpful. Please give me a like and subscribe and make sure to turn on your notifications. Thank you.